Hey everyone, today I'm going to do a lesson on my May 18th trade for gold futures. Thought this would be a really good lesson because it sets up a really nice Fibonacci sequence and a modified Pitchfork sequence. So I'm going to get right into it. First off, I started from the high of the trend and followed price down until I found what looked like it was going to be a good long setup. So first off, I see this high right here. Price is smacked down and it's a bit of a stop run and then kind of trap everybody inside the market. So what are we looking at here? First off, I see we get a nice impulsive leg down. So it's a strong impulsive leg down, and then we get a reaction back up. And we get another strong impulsive leg down, which happens to be just about the same size as the previous impulsive leg. Now, if you know anything about retracements, which I can discuss in another video, markets tend to make similar A equals B patterns and impulses. So seeing that, I think, okay, we have a potential bottom here. What are we coming into? Is there anything higher time frame? I'm going to delete this so it's a little bit clearer. So we know we have an A equals B pattern. Now, going on the daily, I like to mark the levels of major lows and kind of the bodies around them. So what I do is I mark this level and I think, okay, look at this. We've landed in a major low that was created from a panic sell-off or a sort of shakeout sell-off. So you know that's going to be a quality low. And you also know, look at this, it's been tested 3 times with little wicks on the daily. So you've got a solid level here. Now, going back to the 4-hour, or 1 hour, I should say, we know we have an A equals B sequence landing in a daily zone. Similarly, we also know that sometimes markets like to end in 1, 2, 3 sequences. You'll see them all over the market. So I see a 1, 2, and 3 sequence down. So putting that together, we have an A equals B sequence. We have a 1, 2, 3 ending pattern, and we have what you can consider a selling climax, probably the most massive bar in the down move since the start of this move going into a major level. So right there we have several confluences saying that there's a high probability of a bottom being in. So we have an A equals B, we have a 1, 2, 3 daily support and selling climax, aka biggest down bar. So given that, we have the idea that a bottom could be coming in. Now, what do I like to do? So first off, I'm going to mark the low of number 2 and look for how price reacts when it comes back above an important level. Zooming in here, we can clearly see that the market held for 3 wicks, and you could even say 4 wicks on this level. So I'm going to note that 4 wicks held level. Great. Next, what do we have? Are there signs of buyers coming out of the daily support level and out of the selling climax bar? First off, we have 3 up bars in a row showing strong demand coming out of the low and coming back above. Then we have another fully engulfing bar that's bigger than the down bar, showing the buyers are not only strong, but they stepped up on a higher level. And then we get a rally of 1, 2, 3, 4, 5, 6, 7, 8 bars in a flow. And even though this doji is a down bar, it's so narrow, I consider it part of the flow up. So what have the buyers succeeded at doing at this point? First off, they've taken out a swing low that made a new low. So this is a confirmed swing low since it made a new low. They've taken this out, and now where are they trading? Right here at the second one, or this top of what I would call this the top of the 1, 2, 3 structure. 1, 2, and 3 was busted, as you can see here. So let's mark this level. So as you can see, we got up to this level and we tested, rejected, but just tightly held on. So we're tightly holding on here, and then we finally bust through. This is where you want to be paying very close attention. Are we going to push to new highs and take out this major high, or is there going to be some sort of stop run business? So this is where I started paying attention to the market. Now let's move forward in time. As you can see, the market was absolutely whacked and hit with a massive amount of sell orders to essentially stop out all the shorts up here and stop out the breakout longs in the market and then come right back down. So at this point, I'm paying attention. We've succeeded in taking out some major structure. So could there possibly be a second leg coming up? This is where I like to apply Fibonacci sequences. So drawing off the low in a very obvious, clear Fibonacci sequence, we make our draw all the way to the high. So where do you start paying attention? For me, I like to use the zone between the 618 and the 50 to look for potential buy orders. So let's follow this through. And as you can see, this is how you can tell a stop run was successful. An absolute sell-off afterwards where they just smack price. You can see it happened right up here too. Same situation. It's all part of the plan. Now we're starting to come back into the level that I'm going to be very interested in. First off, what's important to notice is price was pushed through a major area of support and we had a very clear rejection as it tried to get back inside. So what it tells me is that we have a little bit more ways to go. Now, let's watch price as it moves into the zone. As you can see, it's just sliding off at this point. Right here, you might think that this could be a potential bottom with 3 wicks and it pops back up, but usually these moves pop up to this little high and then they continue their move down. And there we go. Now, we're in the zone, so it's starting to get interesting. A lot of people would buy immediately on the 618, and I've been known to do that as well, but sometimes I prefer a little bit more confirmation. So let's see what happens as we watch price trade in the 618 zone. So first test of the zone is held. And as you can see, there's clear sign of buyers bidding off of this level at this point. Now, a lot of people would like to chase at this point and think they've got to get in, but as I found for years of experience, we tend to go back down for another test. And there it is. So this is the most important bar to me when I'm looking at the testable level. As you can see, this is a massive dump of a bar, just like this bar here. And in a way, you could think it's an intentional move. It's an intentional move to scare people out of the market. So when you see a shakeout bar like this, you've got to ask, what damage is this doing to the market? Is this taking out lows? Has this ruined structure in some way? At this point right now, it hasn't ruined structure. And the way I look at it is, if this holds, then we know this is a very serious low that we can start putting our stops under and start taking entries on. So let's continue to watch this bar. And there it goes. So what did this bar turn out to be? Turned out to be simply a shakeout. So I like to map this bar out, map this zone, and know any test back inside is 100% an entry. All right, so let's see where this starts going. And there we are. So as you can see, we're back in the zone and we actually tapped this little area. You can see by the darker rectangle. So at this point, I'm long in my position. And the question might be, how do you place your stops? So I've created this little table right here that tracks the 55 ATR, the 200 ATR, and something around the 1 to 2 ATR. So that's the average true range of price for a look back period. The question is, how do I use this? What I do is I usually place a stop about 1 ATR from a major support level, or if I'm feeling confident, about 0.5 ATRs from a major support. Now, everything relies on this shakeout bar. This is the bar that defended the low and was not able to cause any damage. And as you can see, a lot of people got short on this bar because this move here shows people getting quickly stopped out. So people went breakout short, they got stopped out. And now price is just gliding down. Not really much effort, not really enough volume to push it through a level. So this is what I do. So we've got 5.2. So you could either take a 5.2 ATR or you can do about halfway. So I like to do around 4 to 3.5 sometimes. So in this case, I believe I did 3.5. So this is my stop right here. Now, anything below this level, I would get stopped out. So, and what are the targets? So targets are pretty clear. All you do is you look for the I use 1.236, and then if you're feeling pretty confident in your trade, or if you want to run a profit stop, you can go for TP2, which is 1.618. Now, also, to maintain this trade, you can kind of use a modified pitchfork and just see how you're doing along the line. A bar like this is a huge stop out bar, so I like to sometimes use the bodies of the bar here. So what I'm going to do, I'm going to take this, going to take the high, then I'm going to draw the line here. So where are we? Okay, let's see how this progresses. And immediately you can see we get massive bids off of that retest of the level because they know this zone is here. They're protecting that zone. And now this is the markup phase. We're on our way to the targets now. So just you wait and watch the trade. Nothing you can do at this point. And just like that, we hit our target, and that's where we stand right now. So I actually took profit because of futures rollover today. Very likely we can move up to 1.618 or do a move like this and move up. I'll be keeping an eye on this trade, but for the most part, this was the trade. This was ended up being about let's see, so there's the entry. So 36 to 3.6, so that's a 10 to 1 risk reward trade, and I'm happy with that position.